Welcome to the Capital Spreads weekly update. Today is Wednesday the 21st of April 2010. The week so far has been interesting considering that we finished off last week with the fraud allegations from the SEC surrounding activity at Goldman Sachs, and we saw a very sharp sell-off at the end of last week, and that did slightly continue through to Monday. But we saw a little bounce. We've almost tested the highs yesterday and earlier this morning, but again we've sold off today. So actually, so far this week we are about unchanged, and it seems interesting how the market has remained relatively resilient considering the sharp fall off on Friday. Often you'll see that financial market, or equity markets in particular, once they've had a big sharp fall from the highs on one trading day, it's often followed by another sharp fall, but that doesn't seem to have been the case so far. So Monday's decline was met by a rise on Tuesday, and now we're down again. So net broadly flat on the week, and that's in the face of very good earnings season in the US, which broadly on the whole have been pretty positive. So it looks like the US markets and the European markets have been a little bit stronger than the FTSE in particular. And that's probably because in the FTSE, well certainly in the UK, we've seen higher than expected inflation and higher than expected unemployment. Today we saw also some quite bullish minutes from the Bank of England. So all in all, it's been pretty mixed in the UK. A little bit of uncertainty about whether inflation will remain high and whether unemployment is actually fully under control. But really on the whole, there's a bit of concern creeping in that the Bank of England might actually have to move a little bit sooner than the market's currently expecting on interest rates. So that's probably why the FTSE is just suffering a little bit when you compare it to, say, the DAX, the and the US indices. So where we are at the moment, the FTSE is around 5730. The Dow is still above the 11,100 mark. The S&P is still above the 1200 mark, and cables had that good bounce. It's around 154.00, and that's on the back of those higher than expected inflation numbers and the good Bank of England minutes. Gold has also been pretty volatile recently. That's around 1140, and so are we seeing the end of this grind higher? The markets just seem a little bit unsettled around these highs at the moment. The S&P has broken through 1200, but is it going to be able to sustain that? The clients are actually, interestingly, long the FTSE on the whole. They've seen this little decline from the highs as an opportunity to get long of the FTSE, but in other indices they're very undecided. The DAX and the US indices are very much a flat book at the moment. On the currency front, they're short the dollar, so they favour sterling and the euro against the dollar. So they expect that this little bounce for cable and euro dollar to continue. They're also long gold, so as we're around the 1140 mark, perhaps clients feel that we could have another test of resistance around 1160, 1165 in gold. But on the whole, short oil as well. So how does the rest of the week look? Well, we've got tomorrow the next debate from our political the three main party political leaders, and that's on international affairs. So it'll be very interesting to see what sort of effect that will have on the polls, which of course have narrowed dramatically in this surge from the Liberal Democrats. Will that popularity continue? And then on the economic data front, we've got retail sales from the UK, which are expected to show a little bit of a decline. Friday, we get UK GDP numbers. So this week has been a plethora of important economic data, which should, in the normal course of business, have a bit of an effect on the polls, but it doesn't seem to be having that. It's all down to these TV debates that seem to be really affecting how people might vote in the election, but we're a couple of weeks away from that still. So for the theme of the week, we are in the US earnings season, and today we saw some incredible move from Apple. And we all know who Apple are, of course. Recently they just launched the iPad, which has proven to be, again, another very successful product. They also mentioned that they're going to have a huge amount of new products coming soon to the market, and their share price really has rallied dramatically today, touching again a new all-time high. So they're trading around $259, so you've got a few charts for you to consider. So this one at the moment is the daily chart, and you can see that obviously the price is driving higher. And what I always quite like looking at on charts is actually inverting them, flipping them to see if this was in the opposite direction, how would I perceive the next price action to be? So if you invert the daily chart that we see now, it looks like this market is still falling, and there possibly isn't any bottom. So that would make you think that it's got a chance of rising further. And if you look at that inverted chart on a longer time basis, a weekly chart over the last few years, it looks like this market is going to continue falling. I mean, it looks like a very dramatic move to the downside. So obviously it looks like this particular stock could continue higher. So we'll watch how Apple does in the future. Tremendous move for the stock today, and we'll be keeping a close eye on it. So as ever, please do give us feedback, media@capitalspreads.com.